Thank you for inviting me.
Are countries ready for this shock?
What we see is that the world economy has been remarkably resilient, shock after shock, and yet growth is at 3.3%. But this resilience, as you said, is being tested yet again, and many countries step into more uncertainty with depleted buffers. Those that have wisely used the last couple of years to rebuild buffers exhausted during COVID and the shock from the war in Ukraine, they are now in a better position. Our advice to all our members: act decisively to get your own house in best possible order in this world of higher uncertainty.
Who has the best buffer right now? When I speak to policymakers in Asia, they say we have enough buffers. It's a different Asia than before. Yet when you take a look at the trickle-down effect, we've seen Asian currencies, Southeast Asian currencies getting hit really badly.
What we see in the world is that many emerging market economies over the last 2 decades have taken lesson from the crisis they experienced here in Asia, the Asia crisis, the global financial crisis. And what they have done is twofold. One, they built fiscal capacity to protect themselves against shocks. They built strong reserves. Two, they built strong institutions. On monetary policy, independent central banks with clear policy, data-dependent to fight inflation. And that is now benefiting countries who have done it. Many of those countries are right here in Asia. This being said, when we look at the world as a whole, debt is reaching 100% of GDP. Many advanced economies that during previous shocks have been able to pour policy support that benefited them and had positive spillovers for the rest of the world now are not in a position to repeat it. So every shock that comes on top of the previous one, the world faces it in a more difficult position.
Give us a sense of the kind of pain that may be inflicted on the global economy should this war get prolonged. I mean, we talk about how we're already seeing the implications of this war, how it's hurting tourism, 23,000 flights already canceled, oil in excess of $80 a barrel, you know, the rerouting.
Yeah. Well, we know the channels that are already demonstrably putting impact on countries and on people, on communities, on businesses. The first one is energy prices. They have climbed up. The second one is confidence. It has been eroded. The third one is travel and trade disruptions. All those are now in place. And the question is, for how long? What I can tell you from prior experience is that if we are to have an increase of energy prices by 10%, and that stays for some time, stays for a year, inflation would go up by 40 basis points. Growth will slow down somewhere between 0.1 and 0.2%. In other words, it is an impact that has to be taken into account. So policymakers have to brace for it. And what does it mean? It means that central bankers have to be more attentive what is happening, both on the price front and on the currency front. We see emerging market currencies depreciating. That, for those of them that borrowed in dollars, makes the service of that more expensive. Those that are export-oriented may have a bit of compensation by having more competitiveness of their exports. For the fiscal authorities in countries, I just want to repeat what we have been saying time and again. Be very careful how you deploy your buffers. And when you deplete it in bad times, please, in good times, rebuild them. We have seen some countries following this advice. Actually, Asia has been quite good. But we also see many countries in good times relaxing, and that complacency is not affordable in a world of more frequent shocks.
You talked about how Asian currencies are reeling, and that's because of the strong dollar. How concerned are you about a stronger USD that Asian countries perhaps may be unable to service their debt?
Well, the reality is that the dollar actually is regaining some of the lost value. So on average, the dollar is not excessively appreciated. And also, as I said, for many export-oriented economies, and Asia, by and large, is about exports, the depreciation of their currencies is a two-edged sword. On one side, yes, it makes servicing their debt more expensive, but on the other side, it makes their exports more attractive. Where attention should go is to carefully monitor developments and keep a cool head. Be prudent in decision making. Don't rush to any conclusions. Let's remember these are early days. At the fund, we are very careful to collect data, but not to rush to any conclusion. And then make sure that you use the multilateral fora. For example, we are going to have the spring meetings of the IMF and the World Bank in April to compare notes with your peers. During COVID, the most impactful policy platform of the IMF was that ability to bring central bankers, finance ministers together so they can see through the fog of uncertainty and take the right decisions. I urge our members to work together, consolidate an understanding of what is happening, and then act accordingly.
Are there countries most at risk in Asia? Which are they?
You know,
are they necessarily
Asia,
the all-important countries?
I would tell you, Asia Pacific, if you take the broader region, I'm very concerned about the Pacific Island economies. Why? They are at the end of the supply chain. So if there are supply disruptions of oil, they are likely to be more severely impacted. Overall, I am concerned about low-income countries, countries with high level of debt. In this environment, it would become so much harder for them. And let's remember, we are in a world where official development assistance has been on the decline. I actually expect that there would be even more demand for the fund to step forward. Today, we have 50 programs. 50 countries rely on the fund to meet their balance of payment needs. We may see the need to augment programs. We may see the need to come up with new programs. But what I can say is that the fund is there for our members. We are ready to act. We recognize our responsibility in this world of uncertainty to be an anchor of stability.
So are you already seeing more countries coming to you for assistance to augment?
We already see discussions around what may become necessary should this uncertainty deepen. Let's not jump the gun. We don't know. We may be in a better place in a couple of weeks. But we do have some of our members that have a significant balance of payment concern already engaging with us to make sure that we act decisively should that become necessary. And that is my advice to policymakers. Lean into this time of uncertainty, work with your peers so we can have not only individual countries' response, but the collective response to be wise and to be impactful.
We've had conversations with experts who suggest that perhaps the US and Israel underestimated the response, the potential response from Iran, and this has gone longer than anticipated, perhaps even worse than anticipated. If you were asked for your advice on how to manage the economic fallout from this crisis, what would you say?
Well, this is exactly our area of competence. As an institution, what is our mandate? Macroeconomic and financial stability, growth, and employment. And in that sense, the most important contribution we make is to accurately assess trends and on that basis advise our members of what are the likely implications for them, for individual countries, for regions, and of course for the global economy, so we can have a policy response that is not only appropriate, but it is well calibrated to provide best buffer to countries. And this is what we do. You will see us during the spring meetings coming with our World Economic Outlook. It will be calibrated to reflect on how we see developments in the world, but also in regions and in systemically significant countries.
You've highlighted that energy security is one huge risk. Are there steps countries can take to ensure they're in a better position going forward?
Well, we have been saying that for quite some time. Make sure that you have diversified your energy supply, that you have high efficiency of energy use, and that you have in your economy a good understanding as to where strategically you should go given what is happening in the world. So energy efficiency always helps. You cannot go wrong with it. The cheapest energy is the one you don't use. And look at how you structure your energy systems. We also have been advising the European Union that has gone through a tremendous shock because of the war in Ukraine to take seriously the need to integrate the energy system of Europe rather than having 27 fragmented energy systems. And that is what I think the world needs to look into. Position yourself within your neighborhood, within your region, to be as protected and as secure as you can be.
Kristalina, I was interested, it was interesting to hear you talk about the new world where, people need to be a bit more agile. I'm just wondering, give us a sense of where that came from. When did this new world start? What prompted this new world? And what are some of the big concerns you have?
Well, I think the new world has been in the making for some time. It became very obvious that we are in this new world since COVID, because COVID was a massive exogenous shock. And then it was followed by the war in Ukraine, unthinkable event. COVID also, unthinkable event. And then by an inflation spike, interest rates going up. So this shock after shock after shock is demonstrably moving us in this world of more uncertainty. And then we have the multipolarity in our world. And what it means is also that countries need to think of their relations in that new context. For example, here in Asia, there is so much space for economic integration that the Asian countries could pursue. Take ASEAN, just one number. Trade within ASEAN is 22%. Trade within the European Union is 60%. Think about how you can strengthen your economy in a world of more frequent shocks. What does it mean? Build your buffers, have prudent policies and institutions in place, let your private sector flourish, eliminate the obstacles to private sector entrepreneurship. Why? Private sector is more adaptable, more agile than governments are. So do what is necessary, lean into this changing world in a way that gives better opportunities to your citizens and puts you in a stronger position to face the headwinds that are inevitably going to continue to come. My message is, I don't know what the next shock is going to be. I only know that shocks will continue to come. So building a resilient economy, resilient regions, resilient world is our responsibility to people everywhere.
Of course, it's not just ASEAN, there's APEC, there's RCEP. The role
Yes.
of multilateralism, I mean, like, how confident are you?
I'm actually much more upbeat than most of the commentators on this topic. I don't think that the world is collapsing. It is changing. What I see is a significant reshape of countries' relations and positions, and I actually would not be too pessimistic about the future, because I think these are new opportunities to build new alliances, to seek ways in which countries can have more flexibility in how they define their own future.
This is a world that's, I guess, coping with risk really well, the idea of risk. What's the most underpriced risk right now?
Well, in my view, the most underpriced risk is accidents happening. The most underpriced risk is this unthinkable events that may hit us. If I am to offer any advice, is learn as an individual, as a policy institution, as a business, learn to think of the unthinkable. And you be prepared to face it and act when the unthinkable happens. And that kind of agility of policy making, agility of business positioning, we need it because of the multiple drivers of change. We have geopolitics, we have technology, we have demography, we have climate. All of them are acting at the same time, and we have to be able to function well in this context. So think of the unthinkable and act decisively when the unthinkable happens.
Are we underpricing the risk of inflation surging again?
I think that that is one of the aspects of this more unpredictable, more uncertain world. We cannot take the victory against inflation as given, take it for granted. We have to monitor carefully what is happening, and this is why the independent central banks that are data driven in their decision making are so valuable. And we did an analysis that really positively surprised me. Emerging market economies actually have moved very forcefully in a direction of independent monetary policy making. And we see the result. Many of the emerging markets were faster to act when inflation started spiking. So they learned the lesson from crisis. Now is the time for advanced economies to relearn this lesson. And I believe very strongly that when we have good institutions, when we have open channels for communication so we can learn from each other, when we have places like the IMF for policymakers to come together, we can navigate successfully in a more uncertain world.